talk about the stock market. Everything was going up on Monday, okay, including the ones I called out like iRobot, which I sold early. But we need to congratulate those who bought into Workhorse and BLNK from the last top 3 stocks swing trade video. Handshakes all around, everyone. Handshakes all around. Okay, both Workhorse and BLNK, okay, the double brothers, I call them the brothers because they both popped up 30% together, okay, and even more than that after hours, I think. And that was more special than what happened on Monday because that happened in a downtrending market or in a stagnant market. Both Workhorse as well as BLNK up 30%. Okay, but what to do with those companies or stocks that have ran up 50%, so much more to its all-time highs, such as Workhorse and BLNK, that's ran up pretty much to its all-time highs? Okay, it depends all on your risk tolerance, okay? For those of you who are called my conservative risk managed investors, we'll be happy with like 30%, pop to its all-time highs, and B would actually exit, according to the plan, okay? And what I would personally do, I would actually exit some positions, or at least 50% of my positions, right now at its all-time highs, and maybe write the rest out using a trailing stop loss. Just to make it clear, okay, those are not my long-term investments, okay? I'm just swinging these stocks, okay? So, but if you're a long-term investor in these companies, okay, all you have to do is just to average down to get more shares. Just like how I did with NIU, okay? And that company has been running up massive, and I'm not selling any because once it drops down a little bit more, I'll just add on my positions. Okay, and my greedy, okay, maybe my hungry risk managed investors, okay, they're not satisfied at the all-time highs, okay, then those I would actually, what I would do personally is I would actually set a trailing stop loss, okay, 1 ATR, which is around $1 or $2 below its all-time highs, and let it ride up for the further upside. Okay, this is for people who are more, risk oriented. You don't mind sacrificing a little bit of potential profit for more profits. Okay, but personally, I'm more conservative, so I would secure my profits, around 80% of my profits, and watch for any dip that's going to happen and ride it out again, or even switch these funds to find better opportunities, because every week there's always new opportunities. Okay, there's no need to FOMO on one particular stock unless you are long-term on it. Okay, one note, I said greedy, but we should always risk manage. In fact, everyone who's watching me should be a risk managed investor. If not, get out of here, okay? Join other channels, okay? Because here, I really want everyone's primary goal is not to lose a huge amounts of money. Okay, so it's okay to lose a little bit, but what I want to avoid is massive losses. Okay, as the math does it, right? Okay, if you lose 50%, you need to gain 100% to get back to where you started from. So it's always good to not lose in the first place. Okay, here we find companies that haven't popped yet so that we have a better risk to reward ratio, okay? If you want to find the hype channels, there's plenty out there, but right here, we do risk management. And I appreciate every single one of you for being here and enjoy this kind of therapy session with me. That isn't to say, you can't make money, playing high-risk companies like GME or companies that's going parabolic, okay? But that's just not my style, because those companies, you can make a lot of money, but you can lose a lot of money as well in a very short period of time. And there's a huge chance for those kind of huge gap ups or gap down that, you couldn't raise. Okay, before pre-market open, it could actually get down below your stop loss, and you have to be forced to sell way more lesser than what you think you sell out for. So those kind maximum, okay, if you really want to play it, I would actually do it as a day trade. Okay, but for me, I don't day trade, okay? I do swing trade, so because I don't have the time to stare at the screen, so probably I'll make 1 or 2 trades per day, and within like half an hour, and I'll shut my computer and I'll go back to sleep or make some videos for you guys. Okay, so once again, congratulations to all who bought into BLNK as well as Workhorse. Me, myself, a nice pat on my own back, okay? And again, right, I was very proud of BLNK and Workhorse, not because it has went up 50%, because it's a very well risk managed trade. Okay, we managed to buy at the area of value, and that's the most important part as long as it's concerning my own trade itself. And that area of value is so important because if anything goes wrong, okay, we have a stop loss to protect us. Pray to the stop loss gods, guys. Pray to the stop loss gods. With that being said, everyone, now let's jump straight into the charts, and I'll actually give you a few more companies, that I'm looking for the rest of the week, that have potential, for a massive squeeze upwards. Okay, and let's get into it. Okay guys, now we are at charts. Now we're going to look at 4 other stocks that I'm looking at for the coming week. And 2 of them are actually safety plays, or they are for the more safer and more conservative investors, because those stocks are, if anything goes wrong, you know, you could hold it on for the mid to long term because they have very solid business model and a fundamental business underneath the stock price. Alright, the other stock is a earnings play, and the last stock will be a sector play for my more riskier, risk managed investors. Okay, so the first stock, without further ado, I'm going to talk about is what you're going to see right here is Tattooed Chef. Okay, Tattooed Chef has a really nice business model underneath. They are in a plant-based sector, and we all know what happened with Beyond Meat. Okay, that was actually a mistake I'm going to make in another video. Okay, I sold half my positions a bit too early. Okay, and yeah, now look at it, it's at $200. Okay, and what we want to do now, right, is we want to look at Tattooed Chef in its technical pattern. Okay, so right now you can see that Tattooed Chef is actually trading, okay, at its consolidating, right, and now it's trading near the 20 moving average, and right now in pre-market before hours, okay, it's actually at $24, which is almost right at the 20 moving average. Okay, and if you could buy this area, right, this is what I call a area of value. Okay, you might be able to swing it up for the upside, because I after doing much hype research and social research on this, and this has a pretty strong short float as well, it has a very high chance, you know, to squeeze all the way up to the upside. And yep, I can see easily going to $30 and $35. And right now, it's a very nice area to put your stop loss as well, because you can see right now, right here, right, okay, there is actually a very nice consolidated area around here, and you could just simply place your stop loss around here, which is around, let's see, which is around $23.48 or 39 cents. Okay, if you're even more conservative, okay, you can go below the lowest swing low over here, which is around $22, and this is actually a $2 difference, okay, of risk. Okay, so $2 difference, $2 of risk, okay, compared to unlimited upside. Okay, so this is a pretty good trade to me. But however, do take in mind that this is a company that might take time, and you might consolidate even longer before bursting into the upside. So it's not those kind of impatient plays, or those that I think that will pop immediately in the next few days. But it's a company that, you know, I personally will start building my positions in, because it is going to explode very soon. Okay, next company I'm going to talk about is actually Rocket Company. Rocket Company is actually a mortgage company, and it's actually one of the earliest stocks that I've actually looked at, because I really love its fundamentals, and it's actually one of my stocks in my long-term portfolio, but although not a super big position, but it's still in my long-term portfolio. And companies that made it to my long-term portfolio, it's pretty difficult. Okay, and this company is what I call a value play, or a play on its underlying business model, because it is not in any hype industry. Okay, it's not EV, it's not anything, but this is a company which I can see doing very well in the term of a stock market downturn. Okay, it can sustain itself very well. Okay, and you want to look at its profile, right? Let's take a quick look at its profile before its charts. Okay, I know I normally don't do that, but I want to do that sometimes for you guys. And you can see that its price to sales ratio is 3.42. It's insane. It's crazy. It's trading at a very low valuation, and it has extremely high profit margin, 58% profit margin, because this is an online mortgage company. Okay, and you know, online companies have very good margins. And yes, this is what I really like about this company itself. And yes, this company really solid fundamentals. Okay, I'm making a separate video about that, but now I'm just going to roughly skim through its fundamentals. Okay, I really like this as a long-term play as well. Okay, now let's look at its charts. Okay, its charts, right, recently you can see that it has squeezed up massively. Okay, and the funny thing is, okay, just a quick story. Okay, I actually bought in a lot. I started accumulating a lot of this company when I really liked it as a long-term play around this level. Okay, when I feel like, oh, it's pretty good, right? I actually accumulated very much at these levels. Okay, my average cost now is around $20.20. And yeah, then it has been traded in this range for super long. Okay, although it's not super long, but it's been 3 months. Okay, pretty decent. Okay, I'm not seeing much in this, but however, I'm just holding strong because it's my long-term position. And recently, it has squeezed all the way upwards. Okay, a nice 10% pop, and after hours now, it's at $23.35, around 15% pop. Okay, and what I can see is, okay, it can consolidate around here again, and I can see it moving up higher again, and its all-time highs is actually at around this area, around $33. Okay, that means right now there's still a good 30%, 40% more profits to go. And yes, again, as I said, this is a very, very safe company. As I said, the lowest, okay, I can see it go is honestly this swing low over here, which is around $19 is the lowest, almost the lowest that it can go, even if the market crashes. Okay, maybe lower $17, but because it has such a good underlying business, no way this company is going down so much. Okay, so and I really, really like it long term. So again, I'll be accumulating shares around this range, around $22, $23 range, because, and it may take some time, again, same as Tattooed Chef, because it's not a company that I'm gonna see any pops near, but I want to prepare for a pop anytime soon. All right, next company I'm going to talk about is ACB, okay, Aurora Cannabis. Okay, this is the company that that is for the more riskier investors, because this company it is a play on the pot industry, okay, the pot industry. So now it is currently trading a very, very nice wedge pattern. Okay, if you can see, right, I'm going to draw my doodle again. Okay, it is actually trading in a nicer, it's a ascending triangle. Okay, it's an ascending triangle. So it's squeezing. So what you will do is you'll squeeze higher, squeeze, pop, and you'll explode upwards like that, right? So, however, also due to the nature of this company has a pretty high short float as well. Very high chance it may explode to the upside. Okay, and any time from now it may just explode. Okay, you never know. Okay, this kind of companies you never know when the explosion will come. Okay, but it will come. So what I want to do, okay, instead of trying to time, when it will come, then try to time exactly when it is, right? Because we're not gods, right? We're not the stock god. We can't really time it perfectly. So what I want to do is want to accumulate every time it starts to drop at an area of value. And why is this an area of value, guys? Okay, it's trading near the 20 moving average. Okay, very nice place to accumulate company. And you can see that this is actually in a nice little uptrend over here. Okay, anywhere around here, pretty good. Okay, so if it happens, it goes up here again and it draws down again. Okay, I'll be accumulating more shares around here again, and it goes up until it squeezes up higher. Okay, stop loss, I'll put it at where? Okay, if you are more if you are more conservative person, okay, you want to cut losses early, you can put it around here, one swing low, okay, around $10. Or if you are really, really conservative and you are afraid of getting stopped out, okay, you want to go a bit more ballsy, you are more confident in this trade, right? Okay, you want to go around here, the last swing low, okay, which is around $8 or $7.90. Okay, all this arbitrary is all up to your own risk management and how much you're comfortable with losing. Okay, so yes, this is ACB for you. All right, and the last one I'm going to talk about is actually AAL, which is American Airlines. Okay, and American Airlines, right? What I'm seeing right now. Okay, this is the 1 year chart. 1 year chart, you can see that. Oh my God, it has taken a huge dump. Okay, American Airlines is a solid company before the crisis. Okay, and $29 all the way has dropped 50% to its $15 range right now. Okay, and what is it about this company that we are playing? Okay, so its earnings is on Thursday morning, which is probably a day after this video is released. And right now, what we can see, right, if you scroll a little bit closer, okay, slowly closer, okay, right now it's trading around this 20 moving average again, okay, very closely around this 20 moving average, okay, and whenever it gets below here, right, it gets squeezed up again. It's trading around here, and what we can see that it might trade here for a longer period of time. Okay, it might just go all the way here, and okay, it may go down, it may go up. Okay, so in a sense, it's actually going on a nice little wedge pattern over here, and I think right now, what we can see if you zoom in, right, you can see this over here. Okay, if you can see a lot of this kind of plus signs, right? Okay, quick technical analysis, a tip over here. You can see a lot of this kind of like plus signs. What is a plus sign? Okay, where there's a huge long wick over here and a very small body. Okay, this means that the market's indecisive. Okay, that means there's equal amount of buyers and sellers in this company, and nobody knows where it's supposed to go. Okay, they're like, oh my God, I'm pushing it up here. Oh no, then the buyers push it back down again. So they're always trapped around the $15 range. Okay, and there's a lot of people shorting this, a lot of people buying this, and when it goes either way, down or upwards, okay, there will be a massive, shoot upwards. So very important, I reiterate again, please put your stop loss in place for this kind of wedge plays. Okay, let me clear my drawing. So right now, very nice place to enter. Okay, and enter over here. The catalyst will be the earnings on Thursday, and if anything happens, okay, if they report better earnings, it's a turnaround play. If they report better earnings than expected, they probably had negative earnings, but the market is not expecting the absolute worst for this company because there's been no business for the past few months. But if they manage to secure some business, okay, not sustain lesser losses than normal, okay, then I can see as a catalyst to potentially pull this to the upside. And then as again, stop loss can be below this swing low over here, which is around $14.52. Okay, and for its upside. Alright, and that's it for today's video. I really hope you guys enjoyed today's video. Okay, I really rushed it up because I really wanted to get you guys this information beforehand. And yeah, that's it for today, guys. And I wish you all the best. And let's hope for a very good swing trading day. And if you really like the video, smash the thumbs up button. Okay, subscribe to the channel for more great stock picks like this. Okay, I might not be right 100% of the time, but I risk manage 100% of the time. Stock is stayed up.